Okay, welcome back to the channel, everybody. We are back with another live stream. We've got a very special guest with us today, Mr. Siam Kid. Appreciate you taking the time, my man, to jump on and have a conversation about everything Bittensor TAO. So, you've gone from being an RAF pilot to now moving into the whole world of artificial intelligence. I've been following you for a while. I think one of the ways that you summarize your investment thesis is investing in virgin landscapes. So maybe by way of introduction, you could give us a brief background for those who are not already familiar with you, and maybe kind of explaining that thesis of investing in virgin landscapes and how you think about asymmetric opportunities.
Yeah, sure. Oh, sweet. Just getting straight into the good stuff. It's weird going live without I'm used to like a 5-minute countdown when we do our revenue searches, and we're like
revenue search intro.
Yeah. So I've been trading since I was 18. So I've been trading and investing, I don't know, 21-ish years. Probably the world's worst trader for the first 4 years. I lost so much money. I was known as a bit of a degenerate gambler in the Air Force because I remember my salary was always £2,200 per month take home. I'd blow £200 a month in the bar in the officers' mess. And to put that in perspective, a pint of beer was like 50p and a shot of dirty vodka was 10p. So 200 quid went a long way. And I just blew £2,000 a month on trading for 4 years straight. But anyway, eventually I got the hang of it. And I realized that you need to put as much tailwind up your chuff as possible. And I sort of came up with like an investing framework where of looking at sort of generational trends. So you have, like the silent generation, they were absolutely traumatized by World War I and II. And so the investment class that they sort of leaned towards was gold, because it seemed to be like the safe thing. And then you have the baby boomers, and the main asset class that they sort of boomed was stocks. And then you have Gen X, and they boomed computers and the internet. And then you have the millennials, which is basically me. I'm 39. How old are you, mate?
32.
32. Okay. Are you on the cusp of millennial, or?
I think, I'm on the cusp. I don't know. I don't even know what the numbers are, but
yeah.
You're still young, Siam. Don't worry.
Yeah. So millennials, like we're about to boom all sorts of exponential technologies. From crypto, AI, additive manufacturing, space travel, like advanced materials. There's so many different techs that we are sort of about to boom. Gen Z, God knows what they're going to boom in the future, but basically every generation booms one or two different assets. And so for us, and also when you look at the let's say the financial wealth standard distribution, it's like a bell curve with everything. Most of the world's wealth is harbored within Gen X and the baby boomers. Even though the millennials are the biggest demographic on the planet, but it's because we haven't entered our peak financial earning and let's say accumulation phase. So typically someone gets to their peak earning and peak wealth between the age of 45 and 55. So millennials, we're just starting to get into our stride. So give it another 10 years, most of the world, probably a bit more, most of the world's wealth will probably slowly move over to the millennials. And as I said, we are about to boom so many different technologies. So if you look at what the internet has done for the world, I mean, it's woven into every sort of fabric and fiber of life, pretty much. Well, imagine that times 10 or times 100, because AI is our last invention, pretty much. So yeah. So when you identify the big trends, then investing gets a little bit easy, because it's like, okay, well, these are the big undercurrents. Don't go against it, go with it. And then when you identify an undercurrent or a big trend or a growing mountain, whatever analogy you want to use, then what I tend to look for are virgin ecosystems, because then you have network effect. And people pay a lot of lip service to network effect, but it's really true. I mean, this is why Bitcoin is so successful. It's why the internet is so successful, etc. So crypto was the fastest growing industry in history until 2023. And then, so I've been in crypto, well, on and off from 2012 onwards, but I went all in 2016. And the thing that really popped my eyeballs was Ethereum. Once I realized that Ethereum had launched their ERC20 platform, I was like, this is like a virgin landscape where anyone around the world could build the decentralized app. And I thought, wow, network effects are going crazy here. And I went all in on Ethereum at $9 Ethereum. I loved it. And so, yeah, Ethereum did well, still, ticking along. It's flawed in so many ways. It's ridiculous, but it was a first mover advantage.
Yeah.
And then really since then, I've sort of been wandering around looking for the next ecosystem. Now, AI, from 2023, AI as a whole has been the fastest growing industry ever. It was like the ChatGPT 3 moment. And so from 2023, I was looking for that network effect, that virgin landscape and ecosystem. And I didn't find it until November 2023. So it took me 11 months. I was looking, couldn't see anything. And I sort of allocated funds into all sorts of AI projects, trying to catch a tailwind of some sort, but there was nothing. And then, and I was aware of Bittensor, but I think like most people, when you first go to the official Bittensor website, I don't know I haven't even looked at it. I'm just going to open up.
It's terrible. It's terrible.
It was terrible.
Yeah.
And it was a bit far-fetched. It was like, trying to help solve AGI or something like that. I can't remember. It's exactly the same. Bittensor.com. And I was like, yeah, it's a bit far-fetched. It's a bit out there. And I just ignored it until I was a month late, but I found out about subnets. So in October 2023, they released the subnet architecture. And then I was like, holy shit, this is the ecosystem moment of this growing mountain. And I plowed in.
Yeah. So it was the subnet and the fact that you felt that subnets were kind of these AI startups on the network. That was what really drove you to kind of identify TAO as the new kind of virgin landscape. Was that the factor, or was there?
It was the ERC20 moment for Bittensor.
Yeah.
And anyone around the world could set up an independent AI startup on this permissionless incentive protocol.
Yeah. Could you touch on the difference? Because I think this is something that took me a while initially to fully grasp as well. The difference between ERC20 tokens on Ethereum versus subnets on TAO, because subnets are denominated in TAO terms. So while you can create an ERC20 token and inflate it away to infinity, the subnets themselves are denominated in TAO, and with the 21 million hard cap for TAO, that for me was like a key moment to understand the difference there as well.
Yeah, there's no real sort of value linkage mechanism with Ethereum and ERC20 tokens. Like you and I could copy and paste some crappy ERC20 token, launch a new token from our bedrooms, and let's just say it went crazy and it went from 0 to $100 million market cap. There's very little connection between the success of your shitcoin and Ethereum, other than gas fees. I mean, gas fees have been horrendous in Ethereum forever. I remember I spent $190 odd on gas fees for a transaction once. I was like, ugh. But there's no linkage there. And I think they've missed a trick because Ethereum has launched. I mean, it's like, everyone talks about Pareto principle, 80-20. With crypto, it's like 90-10. And then when you go to the far edges of crypto, it's like 99-1. And with Ethereum, when you look at all the things that have been launched on ERC20, it's like probably 99% pure bullshit and 1%, it's done all right. So there have been, Aave, Uniswap, Polygon, all that sort of, there's only been a few things that have actually done well on Ethereum. And so, but most of them have no linkage between their success and Ethereum. Whereas with the subnet ecosystem or with the DTAO, if we have the equivalent of Uniswap and Aave and all that sort of stuff, everything's tied to TAO. TAO is the gross value capture mechanism.
Okay, so you identified TAO. Subnets were kind of a catalyzing moment for you. You then launched DSV Fund at the beginning of this year, and that is kind of your vehicle for going all in on Bittensor, I guess, to maybe just put it simply. Could you tell us a little bit about DSV Fund and maybe more on like the investment philosophy? Like, what do you guys do, or how do you identify subnets that you think are going to outperform ultimately, and what kind of timeframes do you look at when you think about that?
So DSV is actually quite late to like what I was doing. So when I have conviction on something, I don't pussyfoot around. I go all in typically. So all of like my personal wealth, 100% into TAO very early on. All of the limited companies that I control or own, any spare capital, like I was having digital asset treasury companies in TAO, digital TAO, strategic TAO reserve companies before anyone, I think, because all my companies had TAO reserves. And so I was sort of dicking around for about 18 months, 2 years there. And then, for the last, I mean, it took a while to get a hedge fund launch because there's all sorts of hoop jumping you have to go through. We got our license late 2024 and then went live January 2025 this year. In fact, Mark Creaser, who's our CEO of DSV, he was our first investor. So he was our first investor. He had some ideas like how we could improve. He then became our CMO, Chief Marketing Officer. We're like, yeah, you're pretty good. And then we're like, actually, you need to be CEO because I'm a degenerate idiot and I need to be kept away from paperwork and admin and adult stuff.
He's a responsible one.
That was our plan to try and, like, my mission has always been bring in TradFi capital, convert it into TAO, and then sprinkle into subnets. That's always been the mission. So every single thing I've done this year has been with that in mind. But DSV has only raised about $4.5 million over the last 10 months.
Okay.
Which is a bit naff.
Yeah, I think we'll get on to talk about Astrid and Subnet 127 in a few minutes, maybe, because there's some interesting stuff you're doing there. But what is your general approach to identifying or spotting winners in terms of subnets? You know, there's 128 temporary hard cap right now. I know it's very difficult to pick winners when these businesses are so small, but do you have a framework? I know you've been interviewing tons of founders on revenue search. Is it gut feel? Is it understanding their path to revenue? What are the key things that you typically look for?
This is such a hard question to ask because the framework, like my evaluation framework, changes based on the market. And DTAO has then, so DTAO was launched in February the 13th. And in that, since then, it's probably had 2 or 3 different guises of, we either you're in, we've got a hard cap and deregs, or no hard cap and no deregs, and now we've got net TAO inflow. It has evolved a lot. So since February, the way that I've approached this has changed dramatically. But the one thing which I said before DTAO launched, and I said this, probably a good couple of weeks before we went live, was that do not, under any circumstances, buy the top 10 or the top 20 subnets. And the reason being is that I've, this is not my first rodeo, and I've seen, I'm a student of history, so I've seen the beginnings of any tracker or index type market. So when you analyze the beginnings of the S&P 500, the FTSE 100, the FTSE 250, hell, even the FTSE AIM market or anything like that, the opening year or two of a brand new index is batshit crazy. The rotation velocity is just nuts. So something could be, flavor of the month, in the top 10, and they'll be deregistered and gone, zero. And that's with stocks. And so, 80-20 or 90-10 or 99-1 sort of principle, or Pareto on steroids principle, I thought DTAO is going to be absolutely nuts. And and I've had in fact, I had a wallet which I doxed, I share with my sort of community. I was like, look, here's a live experiment. And what I think it had 100 TAO in this wallet. And I just allocated it to the top, I think the top 20 subnets.
Yeah. This was back in like February, March initially.
Yeah, something like that. And then, I used it as a guinea pig, more just to prove a point. And what happened over the next 3 months or whatever was that it went from 100 TAO to 47 TAO, because just the assets rotating in and out of the top 10 or whatever. And so you have to, you can't be a passive holder in DTAO unless you have long horizons. And this is the disconnect here. So everyone talks about, the subnet APY yield. Oh, it's 70% APY or 250% APY, etc. All of that means jack shit unless you're willing to buy a subnet, lock it up in a wallet, and don't touch it for 2 years. Like that is the only way that APY will actually save your bacon, if you can lock it up and park it for 2 or 3 years. But 99.9999% of DTAO investors won't have that time horizon. Yeah. So they may say that and may get attracted to all of these high yielding APYs, but then within a week, it'll be out of flavor and then they'll rotate. And so what we're in is and I say this lovingly, but I'm trying to be as objective as possible. DTAO right now is like a hyper rotational pump fund is probably a bad analogy. It's not like a Solana pump fund, but
there's a flavor of the month, like you said.
Yeah, I mean, I saw in a Telegram group something. I think this morning someone said, "Oh, it looks like this is Zeus's week," or something like that. And like every week, there's like 2 or 3 subnets that just could do this. Everyone is attracted to it, and then everyone rotates out. So now, and I say all this, like there's a phrase that Shakespeare says, "Nothing is good nor bad, but thinking makes it so." And money is an innate object. It's like a table. It's an innate object. It is not good or bad. And a market is not good or bad. It's how people perceive the market. It's how people interact with it. So all the things I'm saying is not me saying, "Oh, DTAO is good" or "DTAO is bad." It's just a market. How you operate within a market dictates your bank balance ultimately. So right now, based on how things are with net TAO inflow, with the halving coming up, yada yada yada, there are things I believe you should be doing and not doing, depending on your goals. I'm being very vague because I think the answer you want is an answer which not many people like, and I'm getting a lot of stick for it at the moment. But please understand, I'm saying this with being like with zero bias. And right now, if you want to make more TAO in your portfolio, ignore the price of TAO. That's out of your hands. Yeah. What's in your hands is pretty much how much your portfolio grows in TAO terms. Correct. So if your sole goal, if you're a robot and you've been prompted to generate as much TAO as possible, unfortunately, it's to sprinkle your load across low-priced, low liquidity pool subnets with a good product or service or potential product or service, and a switched on team. Because like with everything in startups, everything is based on the promise or the potential of success. And so if there's a handful of there's probably good 10 or 15 subnets which are low price, low liquidity, good team, good product, good potential, and because of that, there's way more potential upside. Like you actually have the potential to 3 or 5x your TAO amount with them. But let's take things to the extreme. I think let's take shoots as in fact, Yeah, shoots is always the most expensive one.
Yeah.
The likelihood of shoots doing a 3 or a 5x is incredibly hard. One, because it's got the deepest pool, and if you were to try and 3x shoots, like that is a metric truckload of money that needs to flow into that for that to 3x right now. Or if anyone's from TAO.app here, one of my favorite metrics that you used to have was on the bottom page, on the bottom of your metrics page, and it used to show you the amount of TAO needed per tempo to maintain price. You've got rid of that for some reason. That was my favorite freaking
It's
tool.
gone, is it? Yeah.
Please bring it back.
Okay, bring it back, JJ. Yeah, for sure. So you mentioned, I think you make some very good points. I think there's like a phase we're going to need to go through to get to more maturity, and that's going to involve more capital flowing into TAO in general, which you're working on. You said that one of your goals is to funnel as much capital into the Tensor ecosystem. Exactly. So on that note, what are the challenges when dealing with TradFi and institutional investors? Are you finding that you have to, explain TAO? Like, do they have hesitations because it's got the crypto branding? What have been those kind of challenges with TradFi and funneling large amounts of capital in?
Oh man, it's like headbutting a brick wall. And when you do finally break through the brick wall, there's other bits and bobs, sort of like trying to stop you. So for example, for most of this year, there have been 3, maybe 5. I'm just trying to think. There's been at least 4 big projects that were always in the background with the goal of raising between $100 to $250 million. I remember at the end of Proof of Talk, I sat down and had coffee or dinner with some of these people, like the actual people doing this. It was, oh yeah, I'm doing this, I'm trying to raise 150 and I've already got 80 committed, blah, blah, blah. And I was like, holy shit, there's a lot of momentum building up behind the scenes. I was like, oh, sweet. So the institutional money thing, yeah, done and dusted, fine. I'll stick to my lane. I was trying to, get DSV off the ground. Fast forward to November, or no shit, we're in December now. All of them are flopped.
Yeah.
Every single one of them. Even the one where I think they had like $75, $80 million of committed funds for their raise. It completely unraveled. So of the 4 that I had pretty, good connections with, they all stopped. I was like, holy shit. I've tried to keep my ear to the ground as much as possible, but from behind the scenes, I've seen this little quiet rug. Well, it's not even a rug pull. It's just like, the tablecloth is just gone, and there's no institutional money anymore. So Barry Silbert from Yuma, he's obviously done a load, and it's great. Like, he's the only reason. Oh no, he's not the only reason. He's one of the main reasons I got into Bittensor in the first place. Because when you're doing a DD and you see, holy shit, Barry's going all in with Yuma, that's great. It gives us good sort of top cover credibility. But yeah, over the last couple of months, me seeing all of the big institutional raises flop, I thought, shit. No, if no one's doing this, someone needs to do this. So I sort of diverted my attention to trying to get more institutional investors. Now, going back to so that was the précis to your question. The context, the answer to your question is that when we're chatting to fund of fund managers, big boys, big girls, Billy Big Balls, let's say, and let's say I can TAO pill them. I think I've got good at TAO pilling people now. I can get through to them, and here's what happens. They go, yeah, okay, cool, sounds interesting. They get the whole Google. I always lead with the Google analogy, and then they get the ERC20 moment, all that sort of stuff. They go, okay, yeah, we'll look to putting 1 to 5 million or more. What they do is they give it to their tech DD department or some intern or an analyst. And the analysts will come in and embed themselves into Bittensor for a month or 2. They'll join every Telegram group. They'll join every Discord group. And they just sit there quietly and just say nothing but observe. And so And I've seen these reports coming back to them because, you know, I prod them like, hey, how's it, you know, what timelines of deployment, all that sort of stuff. And I'm just going to rough ball it. Like, the feedback back I get is, okay, the subnets are degen like hell. That's scary. And by the way, I'm saying this with the institutional hat on. Okay?
Yeah.
Like, imagine I'm a big fund. They go, yeah, the investors in the telegrams very, very hairy and very degen. Seems quite like an immature or young market. Discord it was good. So the Bittensor Discord, I've always heard of good things because that's where the tech's happening. That's all the tech type questions. So that's a really good thing. The detail changes too much too quickly. I've had that a lot. So they can't make multi-year decisions based on something that's changing every 2 or 3 months.
Yeah.
Again, I'm not saying that's a good or a bad thing. This is just what I'm seeing.
Sure.
Don't kill the messenger here. So they can't make long business decisions if things are changing. The very fast implementation of net TAO inflow scared a shit ton of people, as in institutional people, because it just happened like that, with no like voting or general governance, etc. That spooked a lot of institutional people because they're thinking, holy shit, if I deploy $1, $5, or $50 million into TAO, what's stopping a quick change making my money trapped or underwater? So what I keep hearing is, I love it. I love what all the subnets are doing, but I'm just going to give it a year or two, or I'll come back in a year or two, or we'll wait until there is actually a breakout subnet. And there are a lot of eyeballs on Ridges. So the amount of people I've heard saying, let's see what Ridges does first, and then we'll have another conversation. So that's their answer in terms of whether they want to get into Bittensor or not. The answer whether they want to come into DSV or not is normally you're too young, you're 10 months old or whatever, and you're too small. Come back when you're $20 million AUM.
Yeah.
So
there's some of the challenges and the problems. Is Astrid and Subnet 127 part of the solution for you going back to that original goal of funneling more capital? So maybe that's a good segue for you to give us some insights and tell us what you can about Astrid and your relationship to the subnet, and what it's going to be ultimately, as I think you're describing it as a capital access for Bittensor.
Yeah. So again, sorry, I keep having to give context before I give the actual answer.
That's okay. So we like the context.
So the context is institutional capital's just evaporated. You then compound that with the recent MSCII thing where all the digital asset treasury companies are now being scrutinized and trying to be excluded from indexes. So Saylor obviously led the charge with the original DAT, really, or the original publicly listed DAT. And since then, we've had, 200 digital asset treasury companies, mainly Bitcoin, ETH, and Solana. There's 4 or 5 TAO ones, which is pretty good, only being 3 years old. That's good to have, that going. But what's happening is that because Saylor and all these DATs are under the spotlight, they're having to quickly prove that they are an operating company, not an investment company, because investment companies aren't allowed or incorporated into the S&P 500 or the NASDAQ or the Dow Jones, etc. You have to be an operating company. And so Michael Saylor says he's a software company that does, I don't know, $500 million a year in revenue. But when you look at his actual company as a whole, he's $500 million in rev, 60 odd billion or 100, however many billions of Bitcoin he has. And they're like, not really. And so the reason these 4 TAO big raises just evaporated is, that has been cemented now, especially with this whole operating investment type company. So if you're a publicly listed company trying to be a DAT or has intentions of being a DAT, you're like, everyone is scrambling around going, we need to be an operating company, operating. So you can't raise money at the moment. We're, in this, at least for the next couple of months.
Yeah.
The 15th of January is when this sort of grey cloud is done and dusted, whether strategy is an investment company or an operating company. If it is an investment company, then see mass unwinding as with Bitcoin, but I think it'll be fine. I think JP Morgan are absolute bastards, and Jamie Dimon has always faded. Like my rule of thumb is always do the opposite of what Jamie Dimon says. So it was actually JP Morgan that instigated this whole investment operating company debacle. But meanwhile, JP Morgan have been gobbling up Bitcoin.
Yeah.
He's done this before. I remember once he was saying Bitcoin is shit, it's going to zero, but his Norway division was just gobbling up Bitcoin. Anyway.
Yeah, under the hood, they're doing the opposite of what they're saying publicly.
Yeah,
for sure.
So if you're a standalone PLC, you can't raise money if your intentions are to be some sort of DAT. If you're a single subnet, you can't raise anything pretty much. You're in this crazy new ecosystem. No one understands Bittensor. And if you can raise money, that's great for you as a subnet in the business. It doesn't help Bittensor as a whole. And my hedge fund, DSV, we've structured it inefficiently. We've structured it in a way, like in hindsight, that no one can put big money into DSV. Because everyone is, I've never run a hedge fund before. This is my first one, and like the way we set it up, we're just never going to get big money in. And when I say big money, I mean tens of millions of inflows, not 100 grand here and there.
Yeah.
So with that in mind, I was like, shit, no one can raise money. Like no one can. But then I was thinking, what if you had a PLC that was an operating company, like a legitimate operating company, that also owned a subnet? And with the way that capital fundraising works, you can raise as a multiple of your revenue and a multiple of your value. So, like, I used to do roll-ups and all sorts of mergers and acquisitions, and in M&A, like maths is not linear. It's like 1 + 1 = 5. So the thought experiment here is, can we get a PLC to own a subnet and get this subnet doing actual tech, actual development of cool shit, and also make profit from its activities, but also you can use the emissions of the subnet as revenue, and you can times it by 12, so it's forward-looking revenue as well. And then can you also create a digital alpha treasury connected to the subnet, because and try and grow that up, because then you can use the growing value of that digital alpha treasury to raise capital. So that was the goal. The goal is like, institutional money's dried up. Someone has to try and give it a shot. So I thought, fuck it, may as well be. Oh, sorry, language.
No, you're good.
We may as well give it a go. I mean, it could flop on our face, but to put things into perspective, in the first 5 days of opening or of Astrid running, we've raised more than DSV has in 10 months.
Amazing. So this is a much more efficient way for you to ultimately funnel as much capital into Bittensor as possible, and then building out that alpha treasury. Is Astrid going to be taking exposure to other subnets? Is that the goal as well? Or will it be Astrid owning them, or will it be the PLC owning them, or what will the mechanics of that look like?
Yeah, so it's a weird one. So the PLC owns the subnet. So I don't own the subnet. Mark doesn't own the subnet. We're just stewards of it. We're running it. We don't own it. It's weird. For the last, 15, ever since I left the Air Force, I've always joked with my friends and family that, I'm unemployable because I hate having a boss. I don't like being told what to do, blah, blah, blah. And then fast forward till to now, I'm now employed. Like for the first time in 15 years, I've actually got a job, which is weird. So yeah, I still find that very weird, because we went from 0 to like in Astrid in the space of 5 days.
Yeah.
like we were more like inserted than, we were basically inserted into it within sort of a 5-day window. So it's not an investment company. It really is an operating company.
Yeah.
There are no investment decisions being made by Astrid. At the moment, Astrid needs a crutch, and the crutch is DSV. So DSV does what it does. So Mark and I, we evaluate subnets. We figure out, what is the appropriate amount to invest, all that sort of stuff. And at the moment, Astrid is just piggybacking on DSV selections, which I know some people may like, some people may not like. I get that. But before Astrid was Astrid, it was Sigma Arena. So Leo Mercier is the tech on that, tech dude, and he was basically building a ridges for trading algos. So running competitions and the miners trying to see who can be the best, create the best trading algo. Well, that's still continuing. So the goal is can we create financial trading algorithms that can beat the human benchmark? The human benchmark is Mark and me. So it's DSV.
Yeah.
So if we can get these trading algos to consistently do better ROI than DSV, which is the human benchmark, then all of a sudden we've got a winner. And then if we've got a winner, we can then just give it money. So the subnet can go, right, here's 100 grand, go. Or we can scale it up because we've got the flows. And then we've got this liquidity sync. So it's a very subnet 73 meta hash type concept. So it's a good concept. I just don't believe they executed well. So with our digital alpha treasury, the goal is to basically suck up as much alpha from everywhere as possible. So when we're doing OTC deals and stuff like that, the OTC alpha will go into this DAT, but digital alpha treasury. But it's going to be a liquidity sink. So what this means is, imagine a nice user interface, and it will have every single subnet, and every subnet will have a discount. So it could be 10%, it could be 50%, depending. So what we don't want is for this liquidity sink to end up with a portfolio of shit alpha. And I said this to Marius, who owns 73. I was like, when you look at their portfolio, it's not a good portfolio. I mean, it had 25% checker trade or checker chain or whatever it is, and it was being deregged because it was just and you just end up with a portfolio which is not good. But with this UI and this dynamic discount, we can sort of incentivize what people swap into it. So let's just say someone, a lot of alpha investors are trapped. Let's say they may have a alpha within a subnet that they love, and they want to get out of it, but they don't want to dump it on market and hurt the chart. So let's just say, I don't know, I think of Richards as an example. Let's say you come along and you want to sell $10,000 worth of Ridges, and let's say on our UI there's a 10% discount. So you can put in $10,000 worth of Ridges alpha into our sync or our DAT. That is then smart contracted, locked up for 27 months. So we can't touch it. So it is locked up, so that helps Ridges. And then by doing so, you then become a miner. But because it's a 10% discount, you'll then be emitted $9,000 worth of 127 alpha. And then you can do whatever you want. You can dump us on market. There's no lockup for you.
And the goal is to then use the data from the decisions that individual investors are making to train the signals as well. That you or no? Am I?
I mean, the discounts will have its own algorithm based on metrics, based on a bunch of different metrics. So if there's a shit subnet doing nothing, like as a zombie subnet, we don't want that in our DAT.
Sure.
So the discount for that could be 90%, or it could be 50%. So you chuck in $10,000 of shit alpha, but you'll only be emitted $5,000 of our alpha, if that makes sense.
Got it.
And we could do some interesting things which I haven't seen done before. Like you could, like, let's say we're about to do a deal of some sort, and we want the market in general to buy that subnet. Instead of being a discount, we could temporarily, for a very short period of time, put a premium on. So let's say, I don't know, Bitcast is a great subnet. Let's say we do a deal with Bitcast, and for 1 hour only, instead of having a discount, we put a 10% premium on Bitcast.
Yeah.
So that means anyone can buy, let's say, $10,000 worth of Bitcast, dump it and lock it up in our DAT, but you'll be emitted $11,000 worth of our 127. Obviously, that will be game to hell. So we'll have to do very short windows.
Yeah.
But yeah, there's all sorts of things you can do there.
Yeah, awesome. I saw the OTC deal with Bitcast this morning, and I know you're continuing to do a whole bunch. So great to see that.
I love Bitcast.
I have to ask you about the halving a little bit because it's coming up next week. Personally, I think we're not going to see major effects possibly until 6 to 12 months after. But there's a couple of people asking about it in the chat here. What is your opinion on the halving, Siam, and maybe on the macro aspect as well as we look to next week and then moving into the new year? Are you doing anything? Like, do you have like a halving strategy, or is it more like, you're in this for the long run? And how are you thinking about the halving in general?
Halvings are typically a nothing burger. Typically, whenever you look at any like proof of work coins that have a halving, typically you see a run up into the halving in terms of price. Halving happens, and then you actually see a sell off or sideways consolidation. So the halving for TAO will be a bit of a non-event but for subnets it does change things a lot. Or does it? So typically, how can I phrase this? It's going to sort of like solidify liquidity a bit. So if anything, it will make things more volatile. So obviously half the amount of, so all liquidity pools will be technically filling up at half the speed. And so if you're a brand new subnet and you've got a very, very teeny weeny liquidity pool, you're going to, and let's say you're an average subnet, your liquidity pool will stay teeny weeny for a lot longer. Which means there's more volatility. So big buys will boost your price, but also big sells will crash your price as well. So that's on the small scale. When you look at the big scale, and again, let's take shoots because they've got the biggest liquidity pool. It doesn't really matter. It doesn't affect them too much because their pool is already huge. You can do big clips of 300-400 TAO in a one and not get slipped pretty much. Well, you get slipped a little bit, but not too much. But the halving doesn't really affect stuff. It's net TAO inflow that is the massive change here. So when you combine net TAO inflow with the halving, it creates new dynamics. So it's weird. I think subnet. In fact, there was a good thread yesterday. So Bad English T put out a post about his thoughts on halving and net TAO inflow and all that sort of stuff. And then Const had his replies, etc. Now, I'm sort of on the fence of both of those. So there's a bunch of points that Bet made which were absolutely spot on. And some of Const's rebuttals to those posts were spot on as well. I can't remember every single point that he made, but from my perspective, if you are a subnet with financial backers, net TAO inflow in the halving is your best friend. Because what it means is, let's say you're a brand new subnet and your liquidity pool is teeny weeny and you have strong financial backing. Well, this is your perfect environment because one, if you've got, here's an example. Let's just say Astrid or DSV does a deal with a brand new subnet and it's got a teeny weeny liquidity pool. But let's say I've committed 1,000 TAO worth of on-market buying. Now, obviously, I'm not going to deploy 1,000 TAO into that on day one. It's going to take months. But what it means is that, 10, 20 TAO here and there, or,
there's constant buy pressure. That's what you're getting at?
Buy pressure over time without spiking the chart. But it just means that you can get that chart into a way that it'll get daily chain buying up until the halving. Post halving, the chain buying will be very rare, because post halving, the emissions need to be double that of the price for chain buying to commence. At the moment, you just need to get emissions above price, and then you get the chain buys. But what this means, in a very broad sense, is that everyone says, the floor, the detail floor, is sum of subnets of 1. That's where the chain protects it. I mean, that's flawed because it's done on an individual subnet basis. But if you're to take that same broad, slightly incorrect analogy, post halving, the detail floor is 0.5 sum of subnet. But again, understand it's on a subnet basis, not as a sum of subnet basis. So yeah, daily chain buying will be incredibly rare post halving. But yeah, if you're a low liquidity, low price subnet with lots of financial backing, net TAO inflow and the halving is your best friend. What net TAO inflow hurts are the research subnets. The subnets which Bittensor was created to help incubate. Because if you're a research subnet, and let's say you've got like a bit of a moonshot, like you're going to change the world in, I don't know, whatever it is you're doing, you're most likely 2 years away from getting near your moonshot target, which means you're not going to be shoehorning in some bullshit product or service to try and get revenue prematurely. Which means where are you going to get your net TAO inflow? And therefore you're going to have a down only chart. Therefore your emissions start spiraling down, and it's a bit of a negative flywheel. And I know Mark and I run revenue search, and everyone thinks that we're like the band, we're like trying to drum in the whole revenue type thing. But I think people miss. This is why I always talk about context, because whenever I sort of jump into these subnet groups and I see people talking about us, like they've got the wrong end of the stick almost every, like 9 times out of 10. I'm not all about revenue. Okay, it was just revenue search was just a play off novelty search. That was it. It was literally just a name play. We've got novelty search for tech, revenue search for the business side. That is literally it. So the context here is that a subnet that has a lofty moonshot should not give a shit about revenue. Because your goal, your sole mission is to, let's say you're Sam Dare of Covenant, and let's say you've got Templar. Templar is there to basically punch OpenAI in the face in terms of distributed pre-training. And when Sam can pull off distributed pre-training on a param model size equal to OpenAI, Bittensor has won, or Templar has won, full stop, because OpenAI won't be able to catch up once he's got to parity. But he shouldn't divert and dilute his concentration in trying to shoehorn some bullshit revenue thing. So he should stay on task. If you take another great subnet, Metanova, Michaela should not be focusing on trying to get revenue quickly. She should be focusing on her, and by the way, she's a smart cookie. She gets this. So she is, focusing on her behavioral drugs, etc. But yeah, I think net TAO inflow does hurt some really good subnets, some really good research subnets.
So are you thinking some of those research subnets are now going to have their hand forced to try and go seek investors like DSV or like other capital injections to mitigate those shorter term effects, just to kind of keep the lights on?
They're sort of up ship's creek, really, because let's say you have a research subnet that goes, right, we need funding, we need some financial backers because we need to help our net TAO inflow, so emissions can go up. Well, if their liquidity pool is so big, you could put 2,000-3,000 TAO into that and it not touch the sides. And the chart, and they'll temporarily have a net TAO inflow and emissions go up, but the chart will continue being down only. So from an investor's perspective, so let's take me as a a capital allocator into detail. It's not a pretty proposition. So if you like, and I really want to, put money into these, but if I'm looking at this and going, right, I'm going to put 3,000 TAO into this research subnet. The pool is pretty deep. Yeah, if we can space it out so you get net TAO inflow, great. But within a month or two, we're going to be back to down only charts, and my 3,000 TAO will be underwater. I'll then be locked up, and I'll be an investment sandbag.
Yeah.
And a sandbag is where you're in a trade or an investment that you can't get out of.
Yeah.
So what I've said for day one forever is that what DTAO needs is long horizoned, deep pocketed money. People hate it, but you need institutional money in DTAO, because what institutional money is long horizoned. So they'll come in big chunks, and they'll have a 5-year horizon at least. I mean, when you look at the typical VC lockup is 8 to 12 years. Anyone that allocates into VCs, they go there knowing, it's going to be an 8 to 12 year lockup. And that's norm. That's the industry norm. So what we need are those VCs and those institutions that will go, fuck it, I'll put 20 million in, and I've got like a 5-year horizon. And they won't give a shit about net TAO inflow, DTAO changes, or volatility. They're like, okay, we're going to plow 20 million in all these subnets. The APY over a 5-year period is going to be monumental. And the sum of subnets, or average alpha price in general, that tide should rise over 5 years. But in the short term, it's not. And therefore, so DTAO needs more long horizoned, deep pocketed money. It doesn't need more degen, hyper rotational DTAO investors.
Yeah. And part of what you're doing with Astrid is trying to get more of those deep pocketed. Yeah,
we need long horizon money. We need, this is why I've been prodding Oblong for months now to, take a chunk of their TAO and put it into subnets, because when Oblong does that, they won't give a shit about the short term. It will be, okay, let's do a 4 to 5 year play here. Let's do the APY play.
Yeah.
And because they're not worrying about paying their rent or mortgage or food bills, etc., it can do that. Yeah. So we need someone to just go, hey Sam, with Covenant, here's $10 million that of alpha buying, or that will last you for the next 3 years. Go. So when you look at things from a GTO perspective, so game theory optimal or optimization perspective, what I think and what I'm speculating is that Const will be the backer to these moonshot research subnets. So I don't think they are actually in trouble. On the face of it, it looks like they will be in trouble, but I think Jake will most likely, prop them up.
Okay. My final question, because we're coming towards the top of the hour. I want to be respectful of your time, Siam.
No, that's right.
We have, if I was looking back in January this year, for example, if I was looking forward, I would have thought that Q4 was going to be a lot more bullish for crypto in general.
Same.
I'm not going to hold you to any predictions or anything here, but as we move into 2026, what is your feeling about the market with the macro picture? Do you think we're in a bear market? Do you think the market structure has changed from the typical 4-year cycle? Just curious of what your thoughts are, let's say, on the next 12 to 24 months.
So for literally the last 20 odd years, my curse is I'm always early, but nearly always right. From an investment standpoint. Like every time, every big move I've ever done, I've always been early and then stuck there, like just waiting. And so for those that have been following my videos for years, whatever, I've at least for last year, I've had this thing called the smooth brain bullet points. And it's a bunch of very logical things. And I've said in 2025, there'll be 100% rate cuts and there'll be currency printing that follow on from rate cuts. And bearing in mind, we had most of 2025 where it was like, no, we'll never rate cut, we'll never rate cut. And then I thought they'd start cutting rates in summer.
Yeah.
But they didn't. They cut rates Q4. So they basically cut rates 3 months later than I thought, which means of my mental model, my macro model, is that everything's been shifted to the right 3 to 6 months. Because I did have an inkling that they'd probably cut rates in sort of April time, but they didn't.
Yeah.
And then the summer one didn't happen, and then it was September. So I think everything's been pushed right. Now, in terms of the Bitcoin 4-year fractal cycle, the world revolves on a 5 to 6 year global liquidity cycle, and the Bitcoin 4-year fractal just so happened to be coincidentally in step with it. But when you have something moving on a 4-year epoch and something moving on a 5 to 6 year epoch, it's going to be similar until they completely phase out, if that makes sense. So the 4-year fractal cycle, I think, is kaput. I think there's going to be a big melt up in 2026 and then a big crash in 2026, and full stop. And there's some other things that you just can't deny. There's like the global M2 is still going through the roof. US M2 will start kicking off soon. The Chinese need to start printing like willy-nilly. And so we're in this weird game where everyone's like, oh, we may or may not cut rates, when they know 100% deep down they have to. It's just political posturing. So more rate cuts will happen. We got the Japanese. In fact, can I share my screen?
Yeah, please.
May help.
Yep.
If I share screen, share my entire screen.
Just to prove it here.
What can you see?
Yeah,
see my
there we
desktop?
go.
Sweet.
Yeah.
Let's get trading view out. So, here we go. I've got the 10-year JPY yield here. So about 3 years ago, I said that, if the Japanese, in fact, I covered this the other day I did a live stream training session. I think, is it around here? No. So I do lots of different doodles. Just trying to find it. No, I can't find it. So basically, for years, you have the BOJ, so the Bank of Japan, and you have let's just call them Japanese investors. Can you see this, by the way?
Yep.
Cool.
We're seeing it.
And for the best part of 20, 30 years, interest rates in Japan have been like basically 0 to 1%. It's been very, very cheap. And so there's been this sort of like money glitch where the Japanese investors have been like the biggest pumpers of traditional assets for forever, over the last 20 odd years, because what they do is they raise a shit ton for like 0 to 1% rates, and they just do an arb. They go, right, where in the world can I get a simple arbitrage? So they bought up Australia, because typically Australia has like 4 to 5% rates. They've bought a huge amount of US debt. So again, anywhere between 3 to 5%, depending on what time frame you're looking at it. And then they buy all sorts of other stocks and stuff. Like we have so many of the world's biggest investment banks being Japanese. I mean, you got SoftBank, one of the world's biggest VCs. And there's loads more. So what they do is they borrow $1 billion, or let's say $100 billion over here, paying let's say 1%, and then they plow it all over into here and here. They're making a good arbitrage, because they're going to make a $200, $300, $400 billion arb over a 10, 20-year period. And so this is why the Aussie yen currency pair is the canary in the coal mine, because typically whenever something scary happens, these Japanese investors are very, very risk averse. So what happens typically, because I used to be a currency trader for most of my life, they go, oh shit, and they sell up everything in Australia. And so what happens is the Aussie yen just goes, whoopsie daisy, it starts doing this. And when Aussie yen starts going down, this is the leading risk off indicator. And because the Japanese investors go to cash. And so the fear with the Japanese rug pull is that if rates in Japan ever start to go up, this global arbitrage would start to slow down. And it's the Japanese investors that have been pumping up every freaking bag that you can think of: crypto, bonds, stocks, commodities, real estate in every country almost. And so and I did a presentation. I need to find it. I'll repost it when I can find it. When the Japanese interest rates started tweaking upwards in, here we go, is there. I remember there was a big old hoo-ha when it basically gapped up pretty much. And I made that, and I was like, oh shit, if this continues going up, the world is in trouble. Well, look what's happened.
Yeah.
The Japanese interest rates are still going up. So it's like 2%. And so it doesn't look like it's slowing down anytime soon. So this is like this massive deflation of, well, a much, there's going to be a lot less money flowing into all the assets than before. So all this does is exacerbate my smooth brain bullet points. In fact, I'm going to find it because a load of people will have no idea what I'm on about. I'm just trying to find, just type smooth in a Telegram chat. Smooth. Oh, here we go. Found it. I'll just create a new thingy. Copy, paste. No, that didn't work. There we go.
Yeah.
Aging population plus falling economic output equals lower GDP. Lower GDP equals insidious taxes and stealth taxes and more borrowing. And then for most of 2025, I've said that we're basically here. We've got to wait for the rate cuts. We have the rate cuts, and we're having the rate cuts. And eventually, it will lead to stimulus pumps, i.e. more liquidity. And when that happens, crypto and risk-on assets absolutely moons. And so one of the things I guess I was half correct for 2025 is here. I wrote this like 100% probability that the dollar goes a lot lower.
Yeah.
And I said that, by 2026, we'll be down in these levels. And we got there like by April. And so more recently, what's happened is that we had the whole, investment company, operating company debacle. But also we had the US government shutdown, the longest in history, which means everything stopped, like all spending stopped. So the dollar strengthened because there's no more debt issuance. And so when the dollar started rising during this thing, risk on assets plummeted. Look here, the S&P 500, you have the Dow Jones, the NASDAQ. And then we also have Bitcoin. Bitcoin dropped as well. But now everything is open. You can see the dollar starting to lose value again. And I could go on and on, but this is
So everything's been extended out a few extra months is kind of the main takeaway I'm getting there. And I still think some of the macro conditions, if we're going to get more rate cuts, makes a lot of sense to me for sure.
Yeah, and to be fair, to be like completely open, like. I really thought by Christmas this year, TAO would have been at least $1,000, and I was very wrong with that. But it will still happen. It's just pushed to the right, to the point where I probably said it in the revenue stream the other day. I had to sell 400 or more than £400,000 worth of TAO the other day just to cover 2 loans.
Wow.
I had 2 loans, which I thought, I'll be fine. So I hate selling TAO.
Yeah. It's the worst. It's the worst. Well, Siam, look, I really appreciate you taking the time to have a conversation today. Would love to connect again in a few months for another update. I think we will have lots of exciting developments in the TAO ecosystem. And hopefully we'll have a few more rate cuts, a little bit more liquidity entering markets. So anyone who's watching, check out DSV, check out Siam on YouTube as well. Any final words of wisdom, Siam, to wrap it up?
I don't know. I feel I've just like verbally vomited over you without much.
It's been good. It was all great insights. Really appreciate you coming on. Thank you for taking the time. I'll be keeping an eye on everything that DSV is doing, and would love to just stay connected.
Amazing. No, awesome. Keep on doing your good work, man.